Hey there, investors! Welcome to Investor Shots, your one-stop shop for all things market-related. Today, we're diving deep into the world of the S&P 500, the stock market's VIP club. It's like the Oscars of the financial world, showcasing the 500 biggest and baddest companies in the US of A. Think of it as a popularity contest for companies, where only the cream of the crop gets in. These companies represent a wide range of industries, from tech titans to healthcare heroes. By tracking their performance, the S&P 500 gives us a snapshot of how the overall US economy is faring. It's the benchmark, the gold standard, the yardstick by which all other investments are measured. And guess what? You don't need to be a Wall Street wizard to get in on the action. That's where our star of the show, the SPY ETF, comes in. So buckle up, grab your coffee, and let's unlock the secrets of the S&P 500 together. Now let's talk about SPY, the ETF that lets you own a piece of the S&P 500 pie without breaking the bank. Think of it as a VIP backstage pass to the S&P 500 concert, giving you access to all the action without having to buy individual tickets for each band. SPY, or the Spider S&P 500 ETF Trust, is like a clone of the S&P 500. It holds all the same stocks in the same proportions, mirroring its every move. So when the S&P 500 goes up, SPY goes up. When the S&P 500 takes a dip, SPY dips too. It's like having a financial twin. But here's the kicker. SPY is super affordable. With an expense ratio of just 0.09%, it's practically like getting the S&P 500 on sale. Plus, it's incredibly liquid, meaning you can buy and sell it easily throughout the trading day. In a nutshell, SPY is your hassle-free, low-cost ticket to ride the S&P 500 roller coaster. Hold on to your hats, folks, because SPY isn't just a popular ETF, it's also the undisputed king of the options trading arena. That's right, SPY is the most actively traded options ETF on the planet, with millions of contracts changing hands every single day. Why all the hype? Well, for starters, SPY's options are crazy liquid, meaning you can easily find buyers and sellers even for large orders. Plus, they offer a wide range of strike prices and expiration dates, giving traders plenty of flexibility to fine-tune their strategies. And let's not forget about SPY's tight bid-ask spreads, which translate into lower trading costs for options traders. It's like getting a discount on your financial bets. Whether you're a seasoned pro or a newbie options trader, SPY's got something for everyone. The S&P 500, just like any other market, has its ups and downs. We call these periods bull and bear markets, and they're like the seasons of the financial world. A bull market is a time of optimism and growth, where the S&P 500 charges ahead like a bull in a china shop. Remember the dot-com boom of the late 90s? That was a bull market for the ages, with the S&P 500 soaring to dizzying heights. But just like all good parties, bull markets eventually come to an end. Enter the bear market, a time of fear and uncertainty, where the S&P 500 stumbles and falls like a bear in hibernation. The 2008 financial crisis was a classic example of a bear market, with the S&P 500 losing over half its value. But here's the good news. Bull markets always follow bear markets, and vice versa. It's the circle of life, Wall Street style. So, buckle up, enjoy the ride, and remember, long-term investors have nothing to fear from a little market turbulence. Just like trees shed their leaves in autumn and bloom again in spring, the market also goes through cycles of decline and recovery. The S&P 500 is made up of various sectors, each contributing to the market's overall performance. From tech giants to healthcare innovators, every sector plays a role in these cycles. Section 5. Titans of the S&P 500 Market Movers and Shakers. Now let's meet some of the heavy hitters, the big kahunas, the companies that make the S&P 500 the powerhouse it is. These are the Apples, the Amazons, the Microsofts of the world, the companies that dominate their industries and shape our daily lives. Apple, with its iPhones, iPads, and Macs, needs no introduction. This tech behemoth is a perennial resident of the S&P 500's top 10, boasting a market cap that's larger than the GDP of many small countries. Then there's Amazon, the e-commerce giant that's revolutionized the way we shop. From books to groceries to cloud computing, Amazon seems to do it all, and its massive market cap reflects its dominance. And let's not forget about Microsoft, the software kingpin that's been a fixture on the S&P 500 for decades. With its Windows operating system and Azure cloud platform, Microsoft continues to be a force to be reckoned with. These are just a few examples of the many titans that call the S&P 500 home. Their innovation, growth, and profitability are what drive the index's performance and make it a benchmark for investors worldwide. Section 6. Dividend Delights, SPY ETF's passive income stream. Now let's talk about everyone's favorite four-letter word, dividends. Yes, SPY, our beloved S&P 500 ETF, pays dividends, and that's a beautiful thing. It's like getting paid to own a piece of the US economy. Dividends are like little bonuses that companies pay out to their shareholders, a way of sharing the profits with the people who own the business. And since SPY holds a basket of dividend-paying stocks, it passes those payouts along to its investors. Now, SPY's dividend yield may not be as flashy as some high-yield stocks, but it's nothing to sneeze at. It's a steady stream of passive income that can help boost your returns over time. Plus, SPY reinvests those dividends for you, buying more shares and compounding your growth. It's like a financial snowball effect. Section 7. Crystal ball gazing, the future of the S&P 500. Predicting the stock market is a fool's errand, but hey, we're all fools here, right? So, let's put on our prognostication hats and gaze into the crystal ball of the S&P 500's future. The truth is, nobody knows for sure where the market is headed. It's influenced by a million factors, from interest rates to inflation to geopolitical events. It's like trying to predict the weather, only more complicated. However, we can look at historical trends, economic indicators, and expert opinions to get a sense of the general direction. And right now, the consensus seems to be cautiously optimistic. The US economy is still chugging along, corporate profits are healthy, and interest rates are relatively low. Of course, there are always risks on the horizon, but that's the nature of the market. The key is to stay diversified, invest for the long term, and not panic when things get bumpy. Remember, the S&P 500 has weathered many storms over the years, and it always comes out stronger on the other side. Section 8. SPY versus stocks. Why diversification reigns supreme. Now some of you might be wondering, why bother with SPY when I can just pick my own stocks? Well, my friend, that's a dangerous game you're playing. Stock picking is like trying to hit a bullseye in the dark while riding a unicycle. It's tough. Even the pros have a hard time consistently beating the market. The beauty of SPY is that it takes the guesswork out of investing. You're not betting on one horse, you're betting on the entire field. It's like having a financial safety net. Plus, SPY offers instant diversification. With one trade, you own a piece of 500 different companies across all sectors of the economy. That's a level of diversification that's hard to achieve on your own, especially if you're just starting out. So, unless you have a crystal ball and a team of Wall Street analysts at your disposal, stick with SPY. It's the safer, smarter way to invest in the S&P 500. Section 9. Fun Fact Alert, the S&P 500's secret ingredient. Did you know that the S&P 500 isn't just a randomly chosen group of companies? There's a secret society, a council of financial wizards, who decide who gets in and who gets the boot. Okay, maybe not a secret society, but there is a committee. The S&P 500 Index Committee, a group of Wall Street veterans, meets regularly to review the index's composition. They consider factors like market capitalization, liquidity, and sector representation to ensure that the S&P 500 accurately reflects the US stock market. It's a rigorous process, and only the best of the best make the cut. So the next time you see the S&P 500, remember that it's not just a bunch of stocks, it's a carefully curated collection of America's finest companies. And there you have it, folks. The S&P 500 and its trusty sidekick SPY are your tickets to financial freedom. They're the cornerstones of a well-diversified portfolio, offering growth potential, dividend income, and a piece of the American dream. So, what are you waiting for? Jump in. The market's fine. Don't forget to like, comment, and subscribe for more investing insights.